Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And today we're going to talk about a couple of major points. We're big Alibaba holders here, bag holders, if you will. Our main man, Charlie Munger, has since passed away, rest in peace. But we got a little update about the Alibaba shares that he had purchased. And we're going to talk a little bit about breaking a new price barrier in today's video.
Not in a good way.
No.
Two Stupid Guys Trade Stocks.
So, are you going to tell us what you want to do with your Baba shares in this
Yeah,
video?
sure. Yeah,
Good, because I
I can
also have a
gladly do that.
lot.
Yeah, absolutely. So our main man Charlie Munger unfortunately passed away last year. I'm gonna really miss hearing him at the Berkshire Hathaway annual meetings. One coming up in May. Get a little taste of his wisdom and sass over these decades. But he did leave us with his last investment being Alibaba shares, something that Dylan and I have both purchased and still hold to this day. But the real question is, what are happening with Charlie Munger's Alibaba shares? Those were held by the Daily Journal Corporation. And the Daily Journal is notorious for filing the 13F filing pretty early within the cycle. So we actually got it this week. They reported their 13F filing and it came out no change. They did not sell any shares. They didn't liquidate the position immediately after Charlie Munger's passing. That doesn't mean that they won't reevaluate it and potentially do something with it in the future. But as of right now, they held, kind of firm with their 300,000 shares of Alibaba stock that they had at while Charlie Munger was still alive. So I don't know if you had seen this. This just happened 2 days ago. They filed this.
Negative. But
No.
I did buy 20 more shares.
That's too funny. Classic Dylan move right there. He did talk about Alibaba's stock more than once. This is from the Daily Journal meeting from last year. But he regarded Alibaba as one of his worst mistakes I ever made, which is not great to hear if you're in the same boat as he is, or
Mm-hmm.
was, I guess. He said I got charmed by the idea of their position in the Chinese internet, which was very domineering, and still arguably is to this day. But I didn't stop to realize they're still a goddamn retailer. All right. I mean, if you look at retail, in the U.S. here, Walmart and Target and those major retailers run on paper thin margins. It's a real cutthroat business because what's the difference between Home Depot and Lowe's, right?
So,
What color the logos are.
well, hold on. Two things. One, Home Depot's good, Lowe's sucks. If you've ever had to redo a house, you know that that's completely accurate. Two, just to play devil's advocate here, it's not just a retailer. They have a cloud it's multiple different businesses. And the second aspect of that, the amount of cash they make every quarter is not equivalent to Target and
No,
Walmart.
I agree. That summary is a little bit dismissive, right? The cloud one, I would say I would dismiss that by the fact that the revenue has barely grown at all over the last few
True.
years.
Fair.
Okay, so is that truly a cloud player? Nah, I wouldn't bet my bottom dollar on whether or not that's going to change the valuation of the company in the long term. Um, Alibaba to me is more of a platform business, right? That's where their major profits are from that consumer management revenue, where they're getting paid by these online shops to be on their platform. Okay. Over time, that's been cannibalized by them being the actual retailer where they're selling the products directly. We've talked about that contracting margins has been part of the problem for the last couple of years. Over the last couple of quarters, we finally have seen a reversal in that trend, though, where they've seen now better growth in consumer management, which is like the fatter profit margin, meaning more of a platform business in the last couple of quarters, at least. All right. Um, but yeah, definitely problems, but still, it's crazy to think that he referred to this as the greatest mistake he's ever made. That's pretty startling. The
Yes.
stock chart certainly reflects that, though. Yeah, you got to slide yourself over there. We broke back down below 70. I did not think that was going to happen, to be honest.
Well, I mean, you can look at this two ways, right? You can look at this in an incredibly biased perspective, as I have 390 shares, and now I'm looking at it as I'm at a very good support from all the way back to 2015 and 16. Or
Yeah. I
you
picked
can
a
look at it as you're going to
super
break through.
long chart here. I'm going to show you a couple other quick charts on Alibaba stock too that are probably pretty interesting. Kind of compare and contrast and support this a little bit. So this is just a stock price, which is just a reflection of
Mm-hmm.
basically everyone's desire for a company, right? This is how hot is this company? How sexy is this company? That's what
Well,
they're
okay.
really rating here.
Xi Jing, Xi Jinping,
Yeah,
whatever, just said that he wants to restore relations with the U.S. in terms of trade. Throwing it out there.
Sure. Yeah.
Okay,
I mean,
good news.
you got to see the actions. That's one thing that this has
Fair
really kind of
point.
taught me throughout this process of being a investor in China is that their actions and their words are not always aligned. All right.
Fair point.
But just to kind of give you some buoy to this, where you watch what the stock price has done, where it collapsed back to 2014 levels. Over that time period, this is what revenue has done. Just massive growth in revenues for macro trends. Right?
Yeah.
They did have this lull, this period of red here, where they had quarter over quarter and year over year declines, but that has kind of reversed trend a little bit, and we've had a stabilization of the business over the last few quarters. Which is still they want to show me. And the same thing happened for operating income. They were able to execute and deliver these profits down to like not the bottom line, because they have a lot of investments, which makes the actual overall earnings of the business fluctuate a lot more. So operating income is a better kind of metric when you're looking at the daily Alibaba.com kind of users and all the other websites they own. This is a better evaluation of the actual running of the day-to-day business, right, rather than their investing acumen. Still some good growth. And for those people that talk about how the share repurchases has underwhelmed them, this is actually the shares outstanding. What do you think of that chart?
Well, the y-axis is a little. I mean, it
Yeah,
looks good, but when you look at the y-axis, it's not that much. It kind of it skews the perspective a little bit.
yeah. I
I
mean,
mean, it's
progress in the right
good, but
direction. They're still making progress on it every month. They still have I want to say it was over $15 billion in shares repurchased, like authorized. And they did do that
yeah,
special one-time dividend, which I actually never checked my account to see if I was paid that or
I
not.
did.
That's a good
I got
question.
like
Yeah.
$350 or something.
Nice. Maybe hopefully you use that to buy your other 20 shares of Alibaba stock. So yeah, as I like to do, I always kind of go back and reevaluate this, and I like using this kind of metric, and it's not exactly the gold standard like that, but it allows me to compare where I can put my investing dollars, and put in percentage basis of how much money I'm getting back for every dollar I put out there. If you're looking at the market cap currently, 176, $62 billion positive net cash as of last quarter. Yes, we're going to get a new quarter reported here, so that number will change. And the 12-month trailing free cash flow, $27 billion. Once again, that'll change with the next quarter. 23% yield. I mean, holy crap! High yield savings, what, 4 and 5%? You talk about Robinhood Gold, that's like 5.5%. Those are like okay, those are decent rates of return. Paying off like most high interest debt early, that's like another, it's like 10-15%. Unless you're talking about credit cards, you're talking about 2025. But this is literally in credit card level return territory if you're actually using this metric to calculate it. Yeah, sure, it's not the best one in the world, but it's just like it's crazy to think that you have even the possibility of investing in something that's got a 23% return.
Yeah, I mean, you're speaking to the choir here, but I think it's hard question time. Hey,
Yeah.
Vinny, what is your goal for your shares in 2024? Is there a price where you will say, I'm getting out of the ship? Or are you going to be like Paul? What do you say? I'm going down with this
Going
fucking
down with the
ship
ship.
for
His
NVIDIA?
Nvidia short. No, with Alibaba, I have not been buying more shares in the last like year and a half. I'm still selling covered calls against my Alibaba shares, trying to reduce my cost basis on it. And it's been relatively effective. I would say I've come close to being exercised maybe once or twice, and I'll continue to kind of do that to generate some revenue off of this. As far as on the downside, there is only news related items that could cost me to liquidate my Alibaba shares. An invasion of Taiwan would be one of them. A move towards like privatization by the Chinese Communist Party. Those are like literally the level of things that I would need to see in order to liquidate my Alibaba shares. As the price goes down, I'm willing to lose everything that I have invested in the stock. I think this is, from a numbers perspective, this is a play that makes too much sense for me to just walk away from. Would I add to it at this point? Still, no. I have been, I haven't been adding in the last year and a half, and I was happy with the position I built out, and I'm willing to wait for that to be either right or wrong in the next 20 years. But that's fine by me. It's kind of my thought process.
Okay, let me ask you this. If this was not a Chinese company and this was a American company, would you buy more right now?
Oof. It's a good question.
Think of the
Possible.
multiples and the SPY and the Q, the average multiples.
Yeah.
NVIDIA's at a PE of, I don't know, a million. I don't know what it is, but it's really high. um,
Incalculable.
and then you have a 23% cash flow yield of BABA. If BABA was an
Yeah.
American company, would you buy more shares?
Possibly, possibly.
I thought
Yeah.
it would have definite yes. Okay. All right.
I probably, yeah. I mean, I'm trying to be a little realistic about my own inadequacies as an investor, if you will. I would like to think yes. Now could you find something that's on the American market that has a 23% free cash flow yield that I wouldn't buy? Probably. There's some that I don't trust. Even on still in the American market, but if this was a large American household name that was trading at a free cash flow range like
Yeah,
this, uh, just take my money as the meme goes.
I think the size of the company matters and the long history of the company of profitability, because you're going to have penny stocks. They're going to have a crazy good quarter that's still not worth it. But
Yeah.
okay.
Yeah, or when you see those REITs that are offering like a 20% dividend yield, it's not real. Like that doesn't last.
Yeah, no, not at
Yeah.
all. All right, well, let us know what you guys think. If you're gonna double down, we're at either a very strong support or a really bad time in the next like 6 months. It's gonna be one of those. All right, guys.
Catch you next one.